Kamal, my question is, maybe it's a more basic question, but piggybacking on what you said, I'd like to know, when it comes to investing in different vehicles, what difference do you see between mutual funds, PMSs, and AIFs? Um, do they does one vehicle stand out compared to the other when when you perform your 5P analysis? Um, and also, I'd like to know how you arrived at the name PMS AIF World.
Okay. So mutual fund is a very basic product. It's one of the very well regulated products, and a product which is well diversified, meant for beginners, meant for retail investors, and is meant for that pot of money where one wants to actually take low risk. When I in the last question explained the equation of risk versus return, maybe when one is investing in debt where the first objective is risk, there maybe mutual fund is a very good structure. Because ultimately it's well diversified, it is very well regulated, it works on common measure of one NAV, and hence quite transparent. So for the pot of money where one wants to definitely attain a low risk strategy, mutual fund is a very right structure. However, when it comes to creating wealth, mutual fund there also follows a very good performance. However, it's not the best structure, it's not the most conducive structure, because you are ultimately owning units, you're not owning shares, you're not ultimately becoming shareholder by being by investing in mutual funds. So for when you are wanting to do high performance investing, maybe the debt portion should go into debt mutual funds, and equity portion should go into beyond products beyond mutual funds. That is where that equation of a very clean debt and a focused portfolio of stocks is what ultimately helps you create wealth. So to answer to your question, and then maybe differentiate between mutual fund and PMS. So when it comes to investing in mutual funds, there are so many investors who are investing together, and then when everybody invests together into mutual fund, it kind of works where there are too many behaviors trying to chase a common goal, a mutual goal at a time, and money comes in, goes out, too much there are at times redemption pressures. Money is coming every day, maybe in form of SIPs. Fund manager has to invest that money, he cannot sit on cash. So it definitely provides some limitation to the fund manager in that context. All these aspects are not there when it comes to a very focused product like a PMS, because in a PMS it works on the concept of a demat account, which is separate for every individual. So obviously for somebody who is wanting more standardization, that is offered in a mutual fund product. But somebody who really wants a customized, a focused portfolio, a more concentrated portfolio, a more portfolio where fund manager is more hands-on, that is a portfolio of a PMS, right? Where too many investors are not investing together. It's every portfolio of each investor. So if two investors together invest together in a PMS, their separate portfolios are created. If one investor wants to exit from the portfolio, it is decision taken for himself, not for others. And that ultimately provides a lot of room to the portfolio manager to actually work for those investors who really come with risk appetite, with a goal of wealth creation for long term. And hence he keeps a concentrated portfolio, he keeps a focused portfolio. Weightages in an equity portfolio matter a lot when it comes to achieving high performance. So all that is kind of taken care in a PMS portfolio. Now, AIF is a very fine combination of mutual fund as well as an AIF, as well as a PMS, because in case of an AIF, you get the standardized NAV. You get it works on the concept of everybody working together, which in the terminology we call as a pool concept. Also, it provides the focus of a PMS, because because in an AIF there is a minimum ticket size of 1 crore. Hence, too many retail investors actually cannot enter into it. For each and every AIF scheme, there is it works on the concept of private placement. And investors, when they invest into AIF, it is like in a common pool, in a structure like mutual fund, you are investing, you will get a common NAV, but that the pool is not going to be prone to vagaries of various behaviors, because all like-minded people are ultimately investing into it, because it is a pool of informed investors. It's not that investors will come in and go out. And most of the AIFs, they work on the concept of the closed-ended fund. Today we have a lot of open-ended AIFs also, but primarily it works on the concept of a closed-ended fund. Another very important reason which differentiates the three asset class, these three structures of investing, is that what is the equation of skin in the game. In case of a mutual fund, I would say the skin in the game of the portfolio management team who are actually managing on day-to-day basis is low. In PMS it is high. In AIF it is very high, because in AIF there is a stipulated guideline that a fund management team needs to keep minimum 5% or 20 crores, whichever is lower, as a minimum corpus of their own money into the investment pool. So obviously, there are all these three different structures are equally good in their own context. It ultimately depends on what investor is trying to achieve, what investor is trying to chase, and they are different in terms of taxation also. So to cover that part, mutual funds, and PMS are more or less similar in terms of taxation. The only difference is that in case of a mutual fund, whatever buying and selling happens in the portfolio, that really does not lead to any kind of short-term capital gain tax. But in case of a PMS, because everybody is directly holding securities, it leads to tax impact to each and every individual, the short-term capital gain tax of 10%. For long-term capital gain tax, it remains same. In case of an AIF, it works. The AIF provides the convenience to the investor in terms of taxation. Taxation filing, because tax is actually so basically the AI structure is the one which is accountable to settle the taxation, because it works on the concept of trust, and there all the investors, they pool together, invest money together, and whenever investor ultimately redeems his money, he gets post-tax return. It is the AI structure which is responsible to pay the taxes. So it is the post-tax and post-expense returns. So while understanding the performance of these three products, one needs to keep in mind, you cannot compare these three products, because maybe an AI product is publishing post-tax, post-expense returns, and mutual fund is showing you a gross return, or maybe AIF is showing you a gross return, and PMS is showing you gross return, and maybe expenses are not kind of adjusted. So in terms of transparency, definitely mutual fund is most evolved product. So hence mutual fund is most transparent, most standardized. It is easy to select that product. But when it comes to PMS and AIF, they are less transparent, and that is the reason and at the same time, PMS and AIF are conducive structures to create wealth. So if there is a structure available to create wealth where the transparency is less, there needs to be somebody who needs to do some effort to ultimately to ensure that what is right, what is wrong, to kind of differentiate which are the best products and maybe which are not so great products. That is exactly what we do when we do PMS AIF World, when we created this platform.
Excellent. I have two follow-up questions on what we just heard. One is SEBI doing anything to standardize reporting of the returns? Like you mentioned, MFs are reporting it differently. PMS AIFs may be reporting it before tax or after tax, like that. Is SEBI doing anything to standardize that so that it becomes easy for investors to compare the returns? And secondly, do you foresee, like if you have to foresee in the future, do you see more investments going towards PMS than AIFs, or more into PMS than MFs? So earlier, if 80% went into MFs, 20% into PMSs, is PMS gonna get more share or not?
So, see, I can tell you, as Indian economy moves more towards knowledge economy, definitely the participation of PMS and AI products will increase. So, when I started this discussion, I told you that my belief is that we have evolved from relationship-based business models to information-based business models, right? So when I was in a bank, it was more of a relationship-based business model. And today, when we are doing these discussions, we are more towards information-based business model. So this is exactly what is the meaning of evolution of an economy to becoming knowledgeable. So when we will move up the ladder, and we will move up the ladder in terms of information, investors will understand all these differences, and that investor who has a potential to invest into PMS, has the potential to invest into an AIF, will somehow understand the difference and will somehow understand which are the right PMS products, which are those PMS products. Because even if there is less standardization, it does not mean that standardization means that anybody is kind of publishing wrong numbers. All numbers are published on SEBI's website. It's not that numbers are wrong, but it's basically an understanding which is required at investors level to see it rightly. Because they could be presented in a manner which is difficult for investors to understand, right? One could do a wrong presentation of one's numbers. So as more and more platforms like us, like PMS AIF World would come, investors understanding about equity markets would go up, right? They would understand that yes, holding on to equity in their demat account is definitely a more evolved way of investing into equity market, because it gives you more ownership, it gives you more control, it gives you more I would say thought. Because when you know that you're holding this particular company, this particular institution, and you know more about that company, and market goes down, you tend to feel not that bad. Unlike that, if you're holding units of a mutual fund, you're clueless, and with less understanding, you tend to kind of redeem it or sell it or change it at wrong times. So obviously it is more to do with informed investor. All informed investors who have potential to invest a larger sum of 50 lakhs, because minimum ticket size, which SEBI has rightly done, is 50 lakhs in PMS, and for AIF it is 1 crore. And obviously, if one is investing into one particular product, a large sum of 50 lakhs, investor ought to have a minimum corpus of maybe 2 crores, because one would not put everything in one product, right? So maybe a 20-25% will put in one product. So a larger investor, who we call as an HNI investor, right? If he is an informed investor, or if in future he will become more informed investor, he will definitely invest more in PMS and more in AIF with more information.